Awesome. Have a great workshop.
Thank you. All right. Well, there's only two of us. Hopefully, some more people come because I have some exciting stuff today. So let me share my screen. And then, of course, this is recorded. So anybody who doesn't make it will hopefully catch the recording. Welcome everyone to today's session, Mastering Cash Flow for Cleaners. I'm excited to be here with you because cash flow is the lifeblood of your business. It's what keeps the lights on, the team paid, and your goals within reach. This was highly requested when we spoke last month, so I'm excited to have this for you today. That being said, where's that at? I need to make sure that I have access to the chat. So if you guys say anything, I will see it. All right. Today, we're diving into simple, actionable strategies to help your cleaning business thrive year round, no matter the season. Whether you're struggling with slow months, late payments, or figuring out how to balance expenses, this session is all about equipping you with the tools to take control of your cash flow with confidence. Started, if I can find my mouse. All right. So let's start by talking about the basics of cash flow. I promise this won't be boring. We're going to keep it simple, practical, and so you can take action right away. So what is cash flow? Cash flow is literally the money moving in and out of your business. If you think of your business as a bucket, cash flow is like the water coming in through the faucet, which is your income, and going out through the drain, which are your expenses. You want more coming in than is going out. That's positive cash flow. Negative cash flow is when your bucket is draining faster than it's filling. It's definitely not what we want. All right, making sure I'm letting all the people in. Now I need to, hold on one second. Let me make sure I have a participant screen open also so I don't miss anybody. Okay, cool. So why cash flow matters? Cash flow is more than just a buzzword. It's your business's lifeline. You could have the most profitable year on paper, but if you can't pay your bills, payroll, or yourself, that profit doesn't matter. Positive cash flow means you can reinvest in your business, take on unexpected expenses, or simply breathe easier during slow season. Cash flow versus profit. So let me clear up a common mix-up. Cash flow and profit are not the same thing. Profit tells you if your business is making money over time. It's more like a scoreboard. Cash flow is about what's happening with your money right now. You could have a great profit margin, but still struggle if your clients are slow to pay or you're carrying too many expenses up front. If you're taking too much money out of your business than it can afford. So that's why monitoring cash flow is crucial. Any questions so far? If so, you can feel free to unmute yourself. We'll also have a Q&A at the end. So if you want to wait until the end, that's fine too. All right, so let's dive into the first big piece of keeping a healthy cash flow, revenue consistency. This is all about ensuring you're bringing in money regularly so you're not constantly feast or famine mode. So why does it matter? Think about it. No one likes living paycheck to paycheck, and your business doesn't either. Consistent revenue smooths out the natural ups and downs of seasonal work, giving you a solid foundation to plan ahead. With predictable income, you can pay bills, reinvest, and breathe easier no matter what time of year it is. So tips for creating consistent revenue is first, reoccurring contracts. Offer clients monthly or seasonal packages. Not only does this lock in consistent revenue for you, but it also gives your clients one less thing to think about. Next, diversify your services. Think about what else your clients might need, like a deep cleaning before the holidays, organizing, or even light landscaping. I'm not suggesting to get into something else if that's not something you're comfortable with. But if you're struggling with cash flow, sometimes you have to get creative. Finally, upsell and cross-sell. When you're already at a client's house, suggest add-ons like window cleaning if your insurance allows it, eco-friendly product upgrades, or fridge and oven deep cleans. Small extras can add up fast. And then you have your payment terms and policies. Now, even the most consistent revenue plan can fall apart without good payment terms. Require upfront deposits for larger jobs or first-time clients, and make it easy for clients to pay with you with online invoicing or credit card options. Remember, clear payment terms aren't just for you. They're also a sign of professionalism that builds trust with your clients. I'm going to stop there for a second because I know a lot of us like to save money by skipping out on like allowing credit cards. You end up using Venmo a lot, Cash App, things like that, which isn't necessarily a bad thing. It can get expensive if you have a bookkeeper, but like things like Zelle, that's one thing because that's like checks coming in if it's easy for your client. But you should definitely have, I know 3% can add up when you're paying that for a credit card payment, but if you give an easy way for your client to pay, they are more likely to pay quickly. And also, if they're not paying quickly, so you ever spend too much on your credit card and then the credit card bill is due and you're, what did I do that for? If you knew that the credit card wouldn't like report it to the credit agency, like come after you, all that kind of stuff, you might try to figure out a way not to pay it. And it's going to be the same with your clients. If you wait too long after the cleaning, it's like out of sight, out of mind. Their house is dirty again and they don't want to pay. So you need to make sure that you're invoicing like literally when you leave the job at the latest. Christine said, I'm using jobber payments and love it, but it costs me 3%. It does cost you 3%, but it also gives you more consistent cash flow. And, people will argue that 3% is kind of a cost of doing business. I know some people who kind of charge that back to their clients. Some people buffer it into their fees, how much they charge the client. Some people give cash discounts, so they'll charge a little bit more, but if they pay cash or check, they discount it a little bit. So there's different ways to kind of recoup that 3%. But personally, I feel like, I'll tell you from a bookkeeper stance, so much easier when people pay credit card because it literally links it with the invoice, but also it gives them an easy way to pay. And, electronic payment is just how it is these days. And it's super easy. And yeah, it's 3%, but I think it's totally worth it.
Is it something that I should consider raising my prices by 3% next year to account for that cost, or is it more just a value thing?
So you can look at it either way. I will say that, first of all, you should be raising your prices more than 3% every year anyways. But if you're speaking about like building that into your price increase, you definitely could, because clients don't like to know that they're paying for the credit card. Some people are okay with it. Some people aren't. I mean, I know some places when I go out to eat, if I'm going to use a credit card, it costs me extra. It kind of incentivizes me to bring cash, but usually I don't remember before I go. So I end up paying the 3%. I don't cry about it because I understand it. But I think if you built it into your pricing, then the clients don't feel like they're being quote unquote nickel and dimed. Also, when you go up on your prices, that can be one of your points. I'm going up because, I'm really bad with wording things. So don't use my words, use ChatGPT or something to word it better. But something along the lines of, we're improving our processes to make things, streamlined for you, that kind of thing. So whenever you go up on your prices, you want to make sure that your clients feel like it's benefiting them. The price increase is benefiting them. See, did I already skip? Yes, I did. Okay, so expense management. This is the other half of the cash flow equation. It's not just how much you make, but how much you keep. I will say that it doesn't really say it on here, but two parts of the expense is your actual expenses and then the money that you are pulling out of your account for your personal expenses. A lot of us have started businesses, so that we can control how much we bring in, but you have to be careful not to take out every bit of extra money that your business makes. Some of it needs to stay there because eventually you could have, an emergency happen, things get slow. You want to invest in something, but you don't have the money because you used the money to either buy a vacuum that was too expensive for you at this point in your business, or you saw something shiny that you wanted personally and was like, oh, there's an extra $500 in my business. So keep that in mind. But managing expenses is key. So think of your expenses like a faucet. Even a small drip can add up if you don't pay attention. Keeping your expenses in check protects your cash flow, especially when business is slower. Plus, the less you spend unnecessarily, the more you can invest in things that help your business grow. So some tips to manage expenses effectively is track every dollar. Use accounting software like QuickBooks to monitor where your money is going. This is your starting point. Distinguish needs from wants. You don't need every shiny new tool. Focus on essentials that directly help your business. Reduce variable costs. If you're constantly running out of supplies, consider buying in bulk to save money. And don't be afraid to negotiate with vendors. You might be surprised how much they're willing to adjust pricing for loyal clients. And then as far as avoiding common pitfalls, be on the lookout for these traps. Overspending during busy season, it's easy to justify splurging when cash is flowing, but that can leave you strapped later. Forgetting about recurring costs, subscriptions, memberships, and other regular charges can quietly eat away at your profits if you're not careful. And then not reviewing contracts. Take time to periodically review your expenses. There might be services or subscriptions you're no longer using, but still paying for. Any questions about this before we move on? All right. Okay, so invoicing and accounts receivable. Let's dive into one of the most overlooked yet critical aspects of cash flow, getting paid. Even with the best services and a solid client base, late payments can throw everything off balance. So how can we make sure that your hard work turns into cash in your pocket on time? So the importance of timely payments. Here's the thing, cash flow issues aren't always about not making enough money. Sometimes it's about the delay between finishing the work and getting paid. When payments are late, your cash flow stalls, making it harder to pay bills, buy supplies, or even take home a paycheck. Consistent on-time payments mean consistent, reliable cash flow. So invoicing best practices. Timely payments start with timely invoicing. Don't wait until the end of the week or worse, the end of the month to send out invoices. Instead, send them as soon as the job is done. Include clear payment terms like due upon receipt or net 15, so there's no confusion about when the payment is expected. Automation can also save you time and stress. Tools like QuickBooks or payment platforms can automatically send reminders for overdue invoices. They can also add late fees, and it'll keep you out of uncomfortable chasing payments phase, which we all know how uncomfortable that is. So encourage prompt payment. Now, what if your clients still drag their feet? There are ways to incentivize them to pay on time. For example, you can offer small discounts for early payment, like 2% off if they pay within a week. On the flip side, enforce late fees. Politely but firmly. It's not about being harsh. It's about setting boundaries and valuing your time and effort. If you decide to do something like early payment discounts, then I would definitely also build that into your pricing. So that would be something that you would want to build in upfront when you do your price increase. And then that's also an incentive. So when you do your price increase, you can say something along the lines of, by the way, if you pay today, I give you 2% off, or, whatever. I don't know if I'd give them a week, to be honest. I would, just be like, if you pay the day of, it's X amount cheaper. You can either do a flat rate, a percentage, whatever is easier for you. That can get difficult if you're using something like Jobber, because then you have to go in and adjust the invoice. I don't think they have anything like automatic for that. So not super encouraging that. I guess it's just going to more depend on your clients at the time, how much you're struggling with it, and things of that nature. So if there are no questions, I'm going to move on to the next one. So next up is something that can make a world of difference on how you handle unexpected challenges. A cash buffer. Think of it as your business's safety net. Why you need a buffer. A cash buffer is exactly what it sounds like. Whether it's a slow season, unexpected repair, or an emergency expense, having that extra money set aside means you won't have to scramble. And let's be real, having that peace of mind is priceless. So how do you build a buffer? Building a buffer doesn't have to be intimidating. Start small. Just aim for 1 month of expenses at first. So back up. Let's just say your expenses for 1 month are $3,000. You don't need to save $3,000 like immediately. But if you can set aside $300 a month until you can build up to that $3,000 to have set aside, then do whatever you can while you can, especially during the busy seasons. And if you end up having a little bit extra over, at the end of, say, June, or whatever it is in your area, add more to it. Just kind of think of it like a game, like how quickly can I get this built up without affecting, my regular cash flow. Then as you get more comfortable, work towards 3 to 6 months. Set aside a small percentage of your income each month. 5 to 10% can go a long way over time. And if you have a windfall, like a tax refund, extra revenue, consider putting that towards your buffer instead of splurging on non-essentials, aka the new vacuum. And then keep it accessible. So make sure your buffer is easy to access. A business savings account is perfect for this. It keeps the money separate, but still within reach when you need it. The goal is to only use it for emergencies, though, or opportunities that move your business forward. All right. And then let's talk about planning ahead. Forecasting. Hello to the new people. How are you? We're going over cash flow, mastering cash flow for your cleaning business. So if you weren't here the whole time, definitely be sure and catch the replay. But I am going to, in 2 more slides, I'm going to kind of do a quick recap of everything, so don't feel like you missed out. Finally, let's talk about planning ahead. Forecasting your cash flow is one of the simplest yet most powerful tools you can use to stay in control of your finances. So cash flow forecasting is all about looking into the future to see what your financial picture might look like. It helps you predict how much money will come in and how much will go out over a specific period, like a month or a quarter. This allows you to plan for expenses and avoid unpleasant surprises like running out of money right before payroll. Simple forecasting steps. Forecasting doesn't have to be complicated. Start with a simple list. Write down all the income you expect to receive for the month, things like payments from clients, recurring contracts. You can use your previous month for this and kind of glance and see, okay, these people are going to be the same. These people I don't have, and there's a few new people. So it's pretty easy to figure out what the income is going to be for the month. And then list all of your expected expenses, rent, supplies, payroll, and then subtract the expenses from the income. If the number is negative, you're going to need to adjust by either increasing your revenue or reducing your expenses or your take-home pay. Even a quick 15-minute forecast can give you clarity and help you make smarter decisions. So tools to simplify forecasting. If spreadsheets aren't your thing, tools like QuickBooks or other cash flow apps can make this process easier. They let you automate some of the math and even pull in data from your bank accounts. Just remember to review and update your forecast regularly, at least once a month, if not weekly. Is anybody here not doing their bookkeeping at all? Like, it's okay. And you don't even have to raise your hand if you're embarrassed. I know that it's one of those things that when you start a cleaning business, it's like, oh, I'll get to it. And then you don't. I just want you all to know, I'm going to talk about it in a few slides, but I do have a new community for financial type questions. It's free. It's on Facebook. I'll get to that. But one of the things I'll be introducing soon is a course on how to do bookkeeping do your own bookkeeping for your cleaning business. So keep that in mind. All right. One of the biggest questions business owners face is, how do I know when I'm spending too much or if I'm investing wisely? Let's break it down so you can feel confident in those decisions. Point 1, spending is essential to keep your business running day to day. Things like supplies, payroll, and utilities fall in this category. They're necessary, but they don't necessarily provide long-term growth. They just keep things moving. Think of spending as maintaining the engine of your business. Side note, I have mixed feelings on calling payroll an expense versus an investment. I think the payroll itself is an expense, but I think your team is an investment. And so make sure that you treat them like an investment. And I don't just mean the way you behave towards them, but also the resources you provide them, the training, the encouragement, what's the word I'm looking for? The motivation, to keep going and to complete things on time and properly and all of that kind of fun stuff. So payroll is an expense. Your team is an investment. Investing, on the other hand, is all about putting money into something that will grow your business or improve it over time. For example, buying better equipment could save you time and increase efficiency, while training or marketing could help you land new clients or expand your services. Investments like coaching and bookkeeping can help save you time. For instance, with coaching, most coaches don't tell you anything that you couldn't find on the internet, but when they put it together in a nice little bow where you don't have to spend hours and hours researching and putting it together, it's worth the investment. And then bookkeeping, when you invest something like that, it saves you time and you don't have to reinvent the wheel. Investments should have measurable return, whether that's increased revenue, better efficiency, or more time for you to focus on other areas. So how to invest without hurting your cash flow? Investments are exciting, but they can put a strain on your cash flow if you're not careful. So how do you make sure you're investing wisely? First, plan ahead. Before making a big purchase, look at your cash flow forecast to see if it's feasible. Next, prioritize high ROI investments, so your return on your investment. If something isn't likely to pay for itself in time or make your business significantly better, it might be worth it right now. Finally, if you've built a cash buffer, this is where it shines. Use it to invest without derailing your monthly operations. To wrap up, I want to leave you with a clear set of action steps. Cash flow can feel overwhelming at times, but breaking it into small, manageable tasks makes it so much easier to tackle. Let's recap the steps you can take to master your cash flow today. So, understanding your cash flow, start by taking an honest look at where your money's coming from and where it's going. Remember, cash flow is different from profit. It's about what you have available to spend right now. Building revenue consistency. Focus on creating a steady stream of income with recurring contracts or by offering additional services for your clients' needs. Small upsells can make a big difference. Managing expenses wisely. Track every expense, even the small ones. They can add up fast. Cut anything unnecessary and make sure your recurring costs are still worth it. Streamline invoicing. Don't wait to send invoices. Use automation tools to keep the process smooth and ensure your clients pay on time. Pause for a second. Jobber, for instance, I'll just use Jobber because I know a lot of people use it. They have, a really basic subscription, and then of course it goes up from there. If you have one client pay on time or pay faster than usual, sometimes that is worth paying for the automation tool itself. So while you're trying to cut expenses, don't cut expenses for things that are, pushing your business forward. Build a cash buffer. If you don't have a cash buffer yet, start by saving a small percentage of your income. Even 1 month of expenses can provide peace of mind and flexibility. And plan ahead with forecasting. Use a simple forecast to predict your income and expenses. This lets you make adjustments before cash flow becomes a problem. And invest, don't just spend. Think carefully about big purchases. If it won't improve your business or pay off over time, it might not be worth it right now. Okay, before I go any further, do we have any questions about what was talked about today? Let me ask you this. Did you get anything out of today? Do you feel like you can go back to the office or back home and at least make 3 improvements to your business to improve your cash flow?
I think this helped me a lot. I'm not personally, I don't own a cleaning company, as you know, Erica, but these kind of things, they help me with myself. I keep a statement with all of my commissions, and I try to keep track of everything like it's a business, even though I'm just an employee. So I'll definitely use a lot of these strategies. And also it's nice to be able to explain this to potential customers too. So
Awesome.
Yeah, I definitely found it beneficial.
Okay,
I'm already
perfect.
making notes on, I don't even have a spreadsheet of expenses. I'm like, how do I not have that by now?
Right.
So
And
those,
it's super easy if you just take your, do you have a business bank account?
I do, and a business investors account. So I
Okay,
pull
cool.
$1,500 a month into my investment fund for taxes at the end of the year. And then throughout the year, if I really need anything, that invest in the
That's
business,
good.
I'll pull it from that account as well.
Okay, perfect. Yeah, so if you're using, your business bank account, just print out your last few months of statements and just go through and highlight all of the expenses and, take a look at them, throw them into a spreadsheet, take a look at them to see if they're all necessary. And, and then you'll at least know, hey, this is how much I'm spending a month on expenses, which will obviously help with cash flow and the forecasting and all of that.
Right. Like, I'm not very familiar with spreadsheets. You run it kind of like an old school ledger.
So the beauty of spreadsheets and the pitfall of spreadsheets is you can do whatever you want. Yes, you can just put it in, there's probably some pretty easy courses on, learning like the formulas in there, but you can just say, the categories you want to start with are the ones that are on your tax return. So are you in the US or Canada?
Canada.
Okay. So if you look at, and I don't have that information on me, but like in the US, it's a Schedule C. Canada, I can't remember what the form is, but they have a list of categories that, you have that are deductible. I'd start with that list and then you can always build onto it. So that list might include things like supplies, insurance.
Vehicle.
Yeah, like all of those
advertising,
expenses.
that kind of stuff. Okay.
Yep. And so start with that and then figure out how much you're spending for each of those things on, on your spreadsheet. And then I think the formula for adding everything above it is equal sum and then a parenthesis, and you just like drag your mouse across all the ones you want it to add and then hit an end parenthesis and enter, and it just adds everything up.
I had no idea that you can drag your mouse. You just changed my life. I've
can do
always
that.
just been entering the coordinates or the columns and rows like manually.
You can do that. You can also select the first one, hit the shift button, and then select the last one, and it highlights all of them because you held shift. That's
While
another
you're
quick.
while you're in the sum or like writing the function out. That's so cool. I never thought about
Yep.
it.
Yeah. Well, I'm glad I could help.
And Mom, if you need help with those spreadsheets, then I can do that for you. Because yeah, I did it the old fashioned way for the longest time.
Sweet. Thanks, bud.
I just put together this relationship. There's the
That's
same
my
last
kid.
name, but I didn't even notice it. So
Yeah,
that's
that's
cool.
my boy.
Well, he seems like an investment. Let's put it that way.
Yes. Oh, yes.
So that's awesome. Yeah. So do you guys have any more questions?
What is considered like a frivolous expense and what is a necessary expense? Like you keep saying driving your business forward, right?
Right.
Obviously.
So if I hate to keep going back to the the vacuum. Okay. But, you could go buy, I'm going to assume Hoover's not like the best brand out there. Okay. So you can go buy you a $10, $15, $25 Hoover from Walmart and it breaks every other week or whatever. And then you just keep having, so that's, you think you're saving money, but you end up spending more. You
Right.
could go buy a Shark, like the Black Friday shark sale that everybody was talking about. You could get it for like, $140 instead of like 300 or something. That's something that will help propel you forward because it's going to last longer. But or you could go buy the Dyson, okay, which I'm not talking crap about Dyson. I just know they tend to have overpriced things.
I don't know.
And then that's something that's more frivolous. Is it really going to get you spending the extra $300? Is it really going to get you a better result than getting the Shark that's on sale? So it's just making smart decisions. A lot of people have cleaning supplies that they like, and that's fine. But some of them you can maybe go for the off brand, save a little bit more money, but it gets the same end result. That's not always the case. I do understand that sometimes buying name brand is worth it. I totally get it. But,
I was going to say, Carrie and I have
yeah.
this conversation about vacuums all the time. So it's funny that that's your example because she's like, you don't need to buy Miele vacuums. I'm like, yes, I do. Yes, I do.
But, and I don't know anything about those vacuums. Okay. So, but if my husband, I've always been like the budget girl. Okay. So,
Mhm.
and I wouldn't call him necessarily a spender, but like if we're going to go buy clothes, we can go to Walmart and we can get really cheap. But he's like, no, go to TJ Maxx. You can get name brand and you can get it on a deal. And so, he's all about spend more upfront, last longer, better. So I totally get that. If it's going to last longer, you're going to get a better use out of it. It makes you more efficient, all of that kind of stuff, but there's also a time and place. I mean,
Right.
I'm going to use a purse as an example. I'm not a purse girl, but I did see a Michael Kors bag the other day that I was like, if I can get my hands on that for less than $200, I'm totally going to get it. And I don't even I buy Walmart purses. I buy Walmart sunglasses. My husband
Right.
made me buy Ray-Bans the other day. I mean, not Ray-Bans, Oakley's the other day. And I
those
got
are
it
an
on sale.
investment.
Don't you worry. Okay. I only paid $100, $109. Okay.
Oh,
But
wow.
still, it was a lot for me because that's not how my brain works.
Yeah.
But we had the extra money at the time. I'm not going to go spend that money if I don't have extra in my pocket at the time. So there's a time and place for the investments. If you live in if you serve an area that if you're like short-term rental, for instance, area and there's a slow season, don't go buy the Ray-Bans, okay, right before slow season starts. Don't go buy the expensive vacuum right before slow season starts because you're going to need that money to push you through that season. So it's about timing, making sure that you look at everything before you make those, those expensive, make those purchases or investments based on, what you have at the time. All right. So I am now going to introduce you guys to my new community. I just started a Facebook group online. It's called Clean Co Collective. It's for free and it's just more for cleaning business owners, community to share tips and tricks and stuff with financial challenges. So feel free to join that. It's free. There's a few like membership questions when you go in, but actually I'll put that in the chat for you so it's easy. If you're on Facebook, I guess I'm assuming that you are collective. And so it's just growing. I just started it last Saturday. So feel free to invite your cleaning company friends, all of that kind of stuff. I'm just trying to create a community where like-minded cleaning companies can ask questions that help them in the financial aspect. There's a lot of communities out there that help, like, what product do I use for this? And how do you price a 1,724 square foot, 3-bedroom, 2-bathroom house that they have 2 pets? Okay, so this community is not for that. Those are amazing, but this is more for, what are, your financial goals this year? Like, where would you like to see yourself at the end of 2025? Does anybody have any tips or tricks on, the financial stuff? So this is where that's going to be. I'll be dropping a lot of information in there very soon. I'm trying to wait for it to grow a little bit, but I'm hoping to provide a lot of value for you guys. And then we have the CleanCo Cash Flow Academy. So I'm thrilled to announce the upcoming launch of CleanCo Cash Flow Academy. This course is designed to guide you step by step through mastering your business finances. From understanding cash flow, setting up systems that keep your business thriving, it's packed with actionable strategies and tools you can use right away. So details for that will be coming out soon. For now, you can sign up for the wait list to stay updated. Goal launch date is February 1st, but we will see how that goes. So I'll add that up here too, so you can sign up. Signing up for the wait list is just that. It's just for information. Don't feel like you'll be like required to buy or anything like that, but just so that you can kind of keep an eye on what's going to be included when it's coming out and all of that fun stuff. So now that I have that out here, do you guys have any more questions? We have about 15 minutes left. If you guys want to chat about, we can chat about cash flow. We can chat about other financial stuff. I'm yours for another 15 minutes, but also if you guys want to get back to cleaning, I also understand that as well. So whatever you guys want.
I have a few questions. I'm curious about like the loan grant kind of process and what is too much of a loan to take out? Like, as far as, is there a percentage that you want to look at when you're applying for a loan?
Okay, so let's start with this. Why are we getting a loan?
We're getting a loan because we want to expand into other industries and I need equipment and staff.
Okay, other industries or other like
Other
markets?
branches. I call them all branches. So we're expanding into commercial and post-construction.
Okay, got it. And so you need funding. And what do you need funding for? So you said you're going to need equipment.
Yeah, and I'd like to spend some money training some good staff so that we can just blanket advertise, get a wait list together and start the ball rolling.
Okay. Do you have I'm going to assume it's not a spreadsheet, but Nolan's going to take care of that for you. But do you have a list of equipment that you need to step into these branches? Do you plan on branching out both at the same time, one and then the other? What is that going to look like?
I think if I do a mass advertising campaign, it's going to be both at the same time.
Okay.
And I would definitely, be looking at another vacuum or two, probably a different type of vacuum for commercial or post-construction, just more supplies, like more buckets, more, the basics, like nothing too expensive. I'm not going like,
Right.
floor sanders or anything like that. So probably like $2,000 worth of supplies. And then I find every staff member I hire is about $500 to $1,000 to train.
Okay. And that's good that you know these numbers.
So I'm thinking around like the $5,000 mark, right?
Okay, that sounds good. And it's going to depend on how much staff you need. Do you have the work waiting?
Not yet, but I want to be able to know coming into the new year that I could get my ducks in a row with a loan before I start advertising. That's kind of what I'm asking now.
Okay. Yep. No, that's good. But the reason I'm asking is, you can always, how long does it take you to train staff?
3 months, like train them completely. Yeah.
Okay. All right. So thinking that it's going to take a little bit of time to build up work. You can, get your name out there and that kind of stuff. So yeah, I think that if you think it's going to cost you $5,000 to get the people that you need trained and the equipment you need, you maybe put a little bit of a buffer in there, unless do you have funds in this branch of your business to cover if there were a few unexpected expenses?
I have a little bit of room. Yeah.
Okay.
But that's why I'm considering a loan, because I don't want to just
Yeah.
tap out everything I've
No,
put away.
that's understandable. The reason I'm asking is because if you have a little bit of extra, then you don't need to build that into the loan. You see what I mean?
Mhm.
Like, you don't want to
Mhm.
take out more than you have to. You always want to, it's like one of those hope for the best, plan for the worst kind of thing. So obviously, the goal is everything works out fine. But if at the very worst, this completely flops, you spent $5,000 and nothing happens, you just want to make sure that your current business can pay for that loan. So that would be my suggestion. And, you can always get approved for the loan, not start taking money until you need it, because obviously then you got to start paying on it. They don't care whether you flopped or not. But yeah, I think go ahead and then start the advertising. You can always create a wait list. It kind of gives that sense of demand, like there's a demand for you, and we're not taking anybody else until XYZ. They don't need to know they're the first client, until March 1st or whatever date that you think that you can get everybody prepared for. But that's super exciting. Congratulations on that. I feel like you must be doing something right in the business you're in now to feel confident enough to branch out. So that's awesome.
Thanks. Yeah, I think it's a lot more stable of an industry. Like residential is a grind,
Yeah.
and Carrie's been telling me for a while that it makes sense to go into vacation rental or commercial or post, some of these other branches of cleaning.
And commercial can be more predictable, but then you
Mhm.
also have that when your contract's up, then you lose like a big portion of income if you don't get it again. So, there's definitely pros and cons to everything. Short-term rental, lots of money, but if there's slow season, then that happens. So having something in all of them if you have the capacity for it. So obviously it seems like you're building it out to where you will. That will definitely help with your cash flow, because you'll have the ups and downs of each business, hopefully overlapping to where, I mean, not each business, but each branch, hopefully overlapping to where it doesn't cause too big of a cash flow issue at any given time. So with your growth, one good thing to keep in mind is, I'm not sure if you're using QuickBooks Online yet, but if you're not, when you set up your QuickBooks, you can actually create classes for each branch, so that when you run your reports, you can run class reports and you can actually see your income and expenses for each branch pretty easily.
Oh, nice. So it like
Yeah. So like if you go
divides them out.
to the supply store, maybe one receipt only gets stuff for that branch, and then ring up, the stuff for your residential branch separately, or however, because then, for your monthly profit and loss, everything will show together. So you can see as a whole how you did for the entire business, but you can also run class reports and be like, okay, this much revenue was from this much of my cost of goods sold was from this. Same with your labor costs, you'll class them and then run those reports, and then be able to understand where it's all, how well each branch is doing. That way, how to adjust your pricing for each, or set up better efficiencies for each, because obviously they're all different beasts and how they run. So
Perfect. Thank you.
you're
Yeah, so
welcome.
QuickBooks is fairly simple to run, is my understanding.
Yes, it
Yes
is.
and no.
They make it seem easier to consumers but they make it easier to it seem easier to consumers than it is. When I first started using QuickBooks when I was a salon owner, I looked at it as like a bank register. Like, oh, this was this and this was that. It is a little bit more than that, but I feel like doing something at 80%, hopefully one day you can, invest in a bookkeeper who can help with that. I personally don't serve Canada, so that's not me trying to sell myself. I just know the value of having somebody that can put that together for you if you don't know how or don't have, the time. But, I'm not sure. I couldn't look at your books, but I could tell you it would probably cost you anywhere from $500 to $1,000 a month for a bookkeeper, but it gives you
Is it
the
worth it?
information you need. Yeah. So, I mean,
Yeah,
like
I'm
you can,
pretty lucky in that department because my cousin is she works for an accountant. She's an assistant to an accountant an hour. So it's
okay,
pretty decent.
that's awesome. Yeah, that's good. So definitely utilize that. Is she using a bookkeeping program to help you understand your stuff monthly?
Yeah, she's in QuickBooks. And I
Okay,
use
perfect.
Covers, but I get all my reports on that end as well.
Right. Yeah. So you could talk to her about maybe setting up those classes. Since you're just getting started, it would be a perfect time to get it and then kind of ask her what she needs from you as far as, separating that labor when you give her the reports to run the payroll, and separating the costs. Obviously, you'll have overhead costs that cover everything. Do you guys have a in-person office or do you run it out of your home?
I run it out of my home.
Okay, so you won't have like rent and all that stuff, but like insurance,
No, and my car payment.
yeah, all
But
that is overhead type stuff anyways. So that's not going to show up on those class reports, but the other stuff will. So you can just see high level what each business is doing and profiting.
so I guess my question after all that, because that's great information. I appreciate it.
Yeah.
If because I'm a sole proprietor as of now, right? On the books, I'm
Okay.
probably gonna make 170 gross this year. When should I incorporate? I'm also a single mom that owns my own home.
Right. So
So
that's
I should
probably more for a
incorporate.
tax pro because incorporating in Canada means something different than incorporating in the US.
Oh, okay.
So, yeah, so I don't want to answer that because that's hard to say because they're two totally different beasts. I don't like to answer those questions too specifically, even for US customers, because I'm more like your business. I don't look at the full picture of like your personal financial health and your personal,
Right.
owning a home and that kind of stuff. But definitely you want to talk to a tax pro, and it actually might be worth. Do you guys have a fiscal year that ends December 31st?
Yes.
So it might not hurt to try to get in with a tax pro like ASAP. In the US, you can, once again, incorporating means something totally different here. But in the US, if you need to switch how, like your tax election, you can do a late election before the end of the year, which could have tax benefits for the year you're currently in. So if you could book with somebody or even your cousin or the person she works for before the end of the year, they might be able to give you an idea. I will say there's tax prep, there's tax planning, and there's tax strategy. And all three of those tend to cost, have different costs to it. So just keep that in mind, when you're talking to them about that, depending on what you're asking, you might be getting into something that costs more money, but it could save you more than it's costing you. So just keep that in mind.
Beautiful. Thank you.
You're welcome. All right, guys, we got about 4 minutes left. Yep, go ahead, Susie.
Yeah, I got a quick question to jump in on.
Yeah.
When we're doing forecasting, like we're getting ready to kind of do a business plan for the new year and do an outlook on what we can expect, what we want our goals to be. I can look at our current, client list and do this is, what we can expect to have from them. Granted, that's without anyone skipping or canceling, but it also doesn't include any of our one-time cleanings. Is there a way that you would suggest either like a percentage wise or an average of looking back to pull what you could expect to get from a one-time cleaning that's not going to be recurring business?
Yeah, you can. You can either, average out the last year, like what you've been getting monthly, or you can, if your business kind of has like the ups and downs, like if say this is slow season, then you might want to compare it to this time last year, but keep in mind your growth. So if in total you've grown say 20% since last year, then you might want to take, that those totals, add 20% to it, to kind of guesstimate. I mean, forecasting is never perfect. It just kind of gives you you just want to make sure that you're not,
I just wanted to
completely
stay at
ignoring
least,
stuff.
yeah, like middle of the road, not
Right.
go too far in any
Right.
one direction to where
Exactly.
we're not taking action because we're not, going, oh, we don't have that money, but I know it's going to come in, and also
Right.
not overextending ourselves because we go, well, we made this much last year and this much, I just want a good even keel when we're looking
Yeah.
at setting up this year's business plan.
I mean, does it seem to be pretty, I'm not sure if you've ran the numbers yet, but does it seem to be pretty consistent month to month? I mean, obviously, like 1 month it might be 1,000, 1 month, 1,200, 1 month 800, but it like kind of stays at the same when you average it out.
So do you mean as our growth rate or as our income?
Your one-time cleanings, do they tend
We
to?
definitely have a busy season and a slow season for it. Like busy seasons
Okay.
on the holidays.
Okay.
Slow season is definitely going to kick in February, March, because everyone spent their money.
Everybody got their credit card bills from Christmas.
We do
so-
track all of that. We've been tracking that for the past since 2022. So I've got
Okay,
all
perfect.
for monthlies of what's recurring, what's not. So I can pretty clearly see what our growth rate's at. Just the forecasting ahead of time. Like we're really good at recording the information. I want to get better at using that to predict future.
Right. Yes. And a prediction is just that. Hopefully you'll have a better,
Hopefully
hopefully you're better at it than our meteorologists are. So, but yeah, I think that just doing it at all gives you more clarity than just having no idea what's going on and guesstimating. So you're doing great.
Okay, cool. All right. Yeah, that definitely answered my question. Thank you so much, Erica.
You're welcome. You're welcome. All right, guys, we are at 1 o'clock. Well, 1 o'clock my time. Sorry, probably not your time. Does anybody have any more questions? I don't mind sticking around for a couple minutes if anybody had anything to add. Otherwise, I can let you guys go. Whatever works for you. Good. Awesome. Well, thank you guys so much for your time. Hopefully you guys have my information. If you ever need me, you can also tag me in Carrie's Facebook group. If you have any questions, I don't mind helping there. And then of course, joining my Facebook group would also probably be beneficial. And thank you so much for having me. I appreciate you having me, and I will see you guys next year. I can't believe we're saying that. All right. Have a good one.